euro dollar, and I want us to do a quick backtest also to talk about the critical high and low that one of my members just asked Jerusha. So let's see what we have over this place. So this is euro USD. If I clean everything right there and do something like this to actually can't know where we are trying to start off. So we're gonna start off at this point in time what we are seeing for price and how I can incorporate the critical highs and lows. So from the monthly time frame, what you're seeing is currently that this is the weekly, sorry, is that the market has been really bullish. We swept these highs. We didn't run through them. What you've been seeing is a sweep of liquidities, rejections. There's no displacement fair value gap above that level. Also, these highs have been swept. The highs are being swept. Then we have drops, price dropping, going lower, and then this week we turned lower. And this was a fair value area because what we have a fair value area is a three price leg, a move whereby we have price leg number 2, price leg number 3, price leg number 1, price leg number 2, and then we have price leg number 3. But what we have is a low probability fair value area because we didn't run through this high. If we ran through that high, that will be high probability fair value area, but since we swept, it's the lowest fair value area. And from what you've been always talking about fair value areas is if we see price not respecting the high of a fair value area, right? Settings there, sure, we have a line and it's pink. So if we don't respect a fair value area, then and we go deeper into the fair value area within the fair value area, then what you can anticipate is a sweep of the fair value area low. Why? Because the market does two things, either offer fair value and also seek liquidities of the two things. And within this price leg, what the market had already done is had already offered fair value by having both sellers and buyers involved in this price leg. So if indeed we are bullish, and since we have both buyers and sellers inside this price leg from the high to the low, then there's no need for the market to retrace deeper within this range, right? If indeed we want to continue higher, the only area that we don't have fair value area is from this pink line towards all the all-time highs. So the farthest we want to see price deliver to is to that pink line, and we continue higher. But in this case scenario, we saw the market turned lower, and it is of high probability that you can see price deliver towards these fair value area low. So with that in mind, and now need to find my context area. So I'll have these as my context area, the weekly IR. I'll have my weekly IR there, the immediate rebalance. Then I will be dropping maybe lower to refine it. So from if we expect lower prices, we can expect maybe a retracement into this IR, then we continue lower. But if that one fails, then what will happen is if this one fails to push prices lower, then we can expect a continuation going higher. And for me to be bullish in this case scenario, I need also to identify a critical high. If that high is broken, then we can expect higher prices. Because in this case scenario, what can happen for the market to reverse going higher? We can expect a sweep over this prior week's low, then we start displacing above this weekly IR. So this will be my first level to be watching, but not really excited about taking a trade. So a level that I will be excited to take a trade will be that high that had already been swept. So if this is the level I want to monitor and see how price reacts to that level, these then will be my critical high. So that's how I usually come up with a critical high and low. So I'll not get involved in buys if this area is being disrespected. But if I see this area being disrespected and also fair value gaps start displacing above that level, then I will start looking for buy opportunities. But if I don't see that, I'm still on the sideline waiting for that level to be broken through because it had already been utilized. So if indeed we are bearish, then we don't want to see this area being broken through. But if the market reverses and starts breaking above through that, then I'll be bullish. So this will be my critical high. But I can also refine my critical high on the lower time frames, depending on what we'll be having around this area. But for now, I'm leaning more of bearish other than bullish. But if I see price breaking through this high, and also maybe I do some refinement on the daily time frame, then as of that moment, that's when I'll start looking for buys opportunities. So I need to drop lower onto the daily time frame. And at the daily time frame, want to see, do we have a displacement with fair value gaps that is being formed? Because we have seen the fair value area being a low probability fair value area, right? We have already seen that from the weekly fair value gap. That's a low probability fair value area. And we want mostly to see price to drop towards that fair value area low, because price does two of the things. Either offer fair value, which had already been offered, and also seek liquidity. If price had already offered fair value and price drops to an area where fair value had already been offered, then we're going to be seeking the liquidities. And of the daily time frame, we can observe that we're having a bearish structure. being in play now. You can see had the first rate move, price pushed, swept the liquidities, we consolidated a lot, pushed higher. We didn't really form bullish fair value gaps going higher, so no clarity. We didn't break through that high. Then we started displacing below these consecutive down to up close candles, that's confirming bearish order blocks, breaking through the lows, confirming market structure shifts. And what you can see is last week we had this IR created above that moment, but also what we can see is currently price seems to be displacing going lower. So on Friday we opened, we rallied slightly higher, and then we turned lower. So this coming week, what can we expect? Is it likely that price pushes towards these IR? To me, it's unlikely, because if you go to the lower time frames and maybe observe this Friday candle, what had happened is we had fair value gaps from the lower time frames that are being respected going lower. That is true. We're gonna check on that. So if indeed price is bearish, from what level can we expect maybe to sting into and then continue lower? Okay, so as I was saying, from the daily, what we're seeing is a bearish structure that is coming into play. And sorry, one of my friends came to visit me, so I had to do that. So we continue. We have seen a bearish structure being formed. We are seeing fair value gaps being formed, and also we are seeing displacements happening over here. And there is a likelihood, if we are bearish maybe this Monday or whatever we're backtesting, because we have seen from the weekly, maybe we can consolidate, because for me it's unlikely that we see maybe price delivering to that weekly IR or the daily IR, because I know from the lower time frame we will be having 4 hour fair value gaps being formed within this range. So it's possible that we see Monday consolidate to confirm a fair value gap, of which then we can see Tuesday, Wednesday, and Thursday, maybe Friday expanding going lower. But even that, I need to have my daily level there, the daily IR, because we might also sting into it. And also, since we have that fair value gap, that's why I will need more confirmations for me to be bearish. But refining my critical high, if indeed I'm bullish, then what I want to see is displacement above the IR, and specifically nothing changes. I want to see displacement above that fair value area high that we talked about from the weekly time frame. But as of now, I'm really leaning more bearish, and I will want to see how price reacts to these previous day's low, the Friday low, because if we start also displacing below that low, I have it there. I will align everything from the lower time frame. So having that PDL there, so PDL should be at the bottom. Exactly. So we have the PDL. So I'll also monitor how price will be reacting to that level, and we have all these liquidities resting below here. And specifically, since want to capitalize on maybe daily moves, this will be the first target before even the market reaches that low. Then we have another second target, will be this one. Then a third one, this swing low, if indeed we are bearish before the market rallies finally towards those lows. So having had that, now there's need to go to the 4 hour time frame. And see, also remember I trade during the New York time as of 9 a.m. I want to come at around 8:40 so that I can have the move from 9 until 12 at that 4 hour candle. That's what I usually want to be trading. But in a scenario like this, when everything is clear, I can also try to catch a swing trade in these kinds of position. So with this trade, what I'll do, other than dropping onto the lower time frame, we'll try to have a swing position. Remember, everything is same. Other than the time frame, everything is same. Price action is same. So we have the first target, we have the second target, then we have the third target before the fourth target that is below there. And what are we seeing from the 4 hour time frame? We have displacement with fair value gaps being formed, market drop below that. So in this case scenario, my assuming this price action around this area, where would my critical low being? Because price had already dropped and we confirmed that bearish fair value gap, then I would have wanted to see how price reacts to these lows specifically. If we were to be bearish, I want to see a breakthrough with displacement with fair value gap, and specifically during a given time window. In this session, what you can see, this was around 20 p.m. or 8 p.m. It's around the Asian session. I don't trade the Asian session, and since we had closed below that, I will just let it slide until maybe during the New York session, which for me I usually starts at 9. So immediately this candle that closed that operated from 8, 9, 10, 11 closed below these low that I'd maybe assumed I could have marked the previous day. Then I look continuation going lower with this candle, and that would have dropped lower. So talking about it in this case scenario, remember, wanted to trade Monday and specifically the New York session. So this candle has already played out, because if you see this on Sunday already played out right over here. This one on Friday, then we had Sunday and Monday that opened. We had that 4 hour fair value gap. We have pushed back, and now we have already swept the Friday's low. This candle is if you can see at the time there, it's Monday 00, right? The market has already opened on Monday, meaning we have already swept the Friday's low. We are tapping into that bearish fair value gap. We have also this other bearish fair value gap, but is it likely that we push higher? Not really. But when do I want to execute on sales? Since this previous day's low has already been swept, now this will be my critical low, right? This is the critical low. Yeah, I can let it just be as the previous day's low, but remember, it's also my critical low. Since price has already swept it, I can get rid of this. So since we have seen Monday already swept the Friday's low and we are indeed bearish, and if we see displacement above this low that has already been swept, then we can expect a continuation going lower. And specifically what I want to see is, can we have a reaction of this fair value gap continuing lower? And since it's around the New York time, and we have this fair value gap as well as this fair value gap, price usually can react of this fair value gap going lower, or also we might see a push going higher. So if we see a two candle rejection whereby price has already stuck into this fair value gap, so for price to react of that fair value gap, we need to see the sweep of this prior candles high and then a displacement that will be closing below here for me to engage in price. So knowing this, I can maybe drop onto the lower time frames and try to see whether that happens. So I'll have that high label there. So that's the high I want to see being swept. Then the market start displacing lower. So if we go to the 1 hour time frame, so 1 hour will be my last time frame for me to look at. And what I want to see, if indeed we're bearish, a sweep of that high that we have, damn, it's impossible. So okay, we've seen it's kind of impossible to drop lower because those are maybe lots of candles that cannot be played. So we'll do it over here from the 4 hour time frame. So if indeed we are bearish, want to see price sweep through that high and then close below that critical low for me to be bearish. And so we'll play it. We didn't sweep that high, we displaced higher. That's what we don't want to engage in this scenario. If indeed the market rallies and start displacing above the weekly IR, if the market starts displacing above that level, that's when we're gonna start maybe looking for buying opportunities. But for now, we are leaning more of bearish, seeing nothing. What we have as of now, price standing to that level, we have swept this prior 4 hour candle, and it's already Monday 16. So possibly, if I want to take these until maybe Tuesday, yeah, one more candle. Yeah, that one. So Monday has already closed. We couldn't really have seen price closing below that low. So in this day, we could have seen nothing. So nothing to just engage in price, right? Because this was my critical low for me to engage bearish prices. And if indeed I'm bullish, want to see reactions of this level. And if we see displacements nicely, maybe creating order blocks and also specifically closing above that this level, that's when we can possibly engage going higher. So since the day has closed, we can go to the daily time frame, try to see have we formed that possible fair value gap that we talked about, that Monday could consolidate to confirm a fair value gap of which price can react going lower. So this Friday, so I play one more candle. So this on Monday, you can check there. Monday did consolidate, and now what we're having here, if I can get rid of that, is a daily fair value gap. And so I will be watching around this area what price will do, but specifically for me to be bearish, I want to see price closing below that previous day's low, because price has already swept that. And if indeed we are bearish, we want to see a breakthrough that. And since we usually trade during the New York time window, so I think candles will be printing, and hopefully before even the New York time, if confirmation will have come, that will be really nice. So waiting for this to respond, kind of taking some time. So that's how I usually approach it. Have a specific level. If price doesn't really respond towards that level, then I think I can't force a trade. So Monday, this is the critical low, so this has been done away with. So we can expect maybe a staying into this fair value gap. Then if we start displacing with fair value gaps, then we can also maybe do some refinement for us to engage in price. So where is the, yeah, so play one more candle, I think, because these are around 4 to 8. So we are in the New York time window. So what I'll do, see reactions of this time frame, and see the reactions that will be printing between this high and also this critical low. All right, what we're seeing is price has already swept this high. We dropped lower during the New York time, created a bullish engulfing candle, swept that high. So also swept, tapped into that 4 hour fair value gap. For now, not engaging in any bullish prices. And then the next candle, okay. Then the next candle, what we've seen is we swept those highs, also closed the fair value gap fully, and then we can see price displacing. Right, we're seeing a nice drop going lower, but no fair value gap still formed, and these are around 16. So maybe Tuesday might be closing in the next 1 hour. Let's see. So Tuesday will be closing at this moment. So also Tuesday, maybe if we couldn't really have gotten a nice intraday trade over there, because these are swing trade I'm trying to look, but for an intraday trade you can get a move within this push, but I'm just trying to show you how you can approach it even onto the lower time frame, assuming you don't know the time frame. Assuming these are 15-minute time frame, that's how you can approach it. So we have already swept the previous day's high, as well as tapped into that daily fair value gap. What you're seeing, we are sweeping all these highs, dropping with some nice displacement. We have a critical low over here. Monday has closed. So if you go back to the daily time frame, and assuming like this, you could have maybe missed lots of losses that maybe you could have called good losses, as you are waiting for high probability conditions to come into play. So we can see, if we play out Monday, we swept that prior day high, tapped into that fair value gap, and currently we are displacing. Now we go back to the 4 hour time frame for the New York window. Remember, we are more favoring of bearish prices other than bullish prices at this current moment. And if we have displacement below that critical low, then personally I will try to look for a sell position towards the specific levels that we already analyzed. So until the New York time window, what you can see, this is the 4 to 8 candle. Nothing really could have happened. So at this moment, I could do my refinements. So can change my critical low from this level maybe higher. And how can I do that? So we have that daily fair value gap. Price formed this low, right? And then price dropped. We have a sweep of this low, right? Then price has been pulled back, and seemingly we are dropping, going lower. And if we use the fib tool, we can notice that that low that had already been created had already was already inside discount, deep discount, so to the high. So this low is already within the OTE level. So if indeed the market is bullish, there is no need for us to break through this low with displacements. So that level, indeed, if price is bullish, there's no need to break through that level. But if we break through that, then it will show us that indeed we are bearish, anticipating to see price deliver towards this low first, that low, and then a continuation going lower. So at this moment in time, we need to watch how price reacts. Nice one. So price reacted automatically lower, and I think if you go to the 1 hour time frame, seeing a 1 hour candle displace, and also with fair value gaps, or maybe 15 minutes time frame, seeing price displace below this low from the 15 minutes time frame, you can engage in that price action, expecting a tank going lower. So that happened, and since it's a swing trade, now I can try to position myself with that nice displacement, other than waiting for a fair value gap to be confirmed. So I can just engage there, have my stop loss above this level, even this candle, but having that swing point is ideal. And then 1 to 2, that before the third target is met, because the first target has been met. But also we can expect maybe a confirmation of a fair value gap, then pricing into it. So we might see price even pulling back towards this level. But with the breakthrough, the critical low also can add an advantage to you. You can also, if we could have monitored the 1 hour time frame, it's because price can't take us to the 1 hour time frame with these many candles, because this price action was from May 2023. So many charts, many 1 hour charts. So that's why it's not taking us back. But with the break below the critical low, it shows you that indeed we are turning bearish. So we can expect the next candle to consolidate or to push. If it pushes, we don't want to miss the move. But if it consolidates, we can hope for a fair value gap that later on will push prices going lower. So play. And what's the time? So this trade was taken at around after 11. So no problem. So we have consolidated from that fair value gap. And now see, is it likely that we may sting into that fair value gap? Yes, we stung into that fair value gap. And currently, what we've done, tapped into that critical low, swept these candles high, so the 2 candle rejection. And now, if indeed the market is bearish, should react bearish off this moment. Consolidated again, a nice drop. What's the time? Yeah, Thursday has already come into play, this New York time, because it's a swing trade. We can hold it. Then the market has dropped. And we need to identify new critical lows. If the market breaks through, then indeed I'm bearish. So I'm maybe shifting my SL. So in this scenario, because we had seen a price create that low, and also this candle create the fair value gap, we didn't see a nice breakthrough it. We didn't really see a breakthrough it. What we saw is a pullback with a nice rejection after sweeping these lows. So to me, this candle's low, this the second candle of the fair value gap, which happens to be my entry point, close proximity to the entry point, will be my critical low. If I see price breaking through that, then I can anticipate maybe a continuation going lower, and maybe now move my stop loss towards those highs that have been created. And also what you can notice is this candle has closed, this current candle has closed below this bullish candle. That's a bullish order block. But we can also anticipate a fair value gap to be formed, of which price can react going lower. But price just tanked. We have formed a fair value gap, and that's why I don't usually want to wait for fair value gaps to be traded into. Assuming we could have wanted to wait this fair value gap to be traded into, could price really return to this fair value gap? Most of the time they are most improbable. So in a good scenario like this is just add a position immediately that candle has closed with the stops above that level, and then that could have happened. Consolidation. We have another bearish fair value gap. Now my stops are to break even, but we can also anticipate these fair value gaps to be traded into. And we have Friday, so want to play until where the line is, yeah, to see what could have happened. So the market tapped into that fair value gap, dropping. If we see a drop to below this candle's low, the second candle of the fair value gap, which is now my critical low, if we see a drop through that, I could move my stops towards this high. But if we see now a displacement above this, the third candle of the fair value gap, we see displacement above that high, it could be most likely that we might be sweeping, maybe rallying back to this fair value gap, and we might be caught up on Friday. Price maybe retracing for the for the final part of the week. So my critical low and my critical high that will enable me. So let me ensure this will be my critical high. Why? Because that was the high of a fair value gap. right? That was the high of the fair value gap, and what we've seen, that fair value gap has been traded into. So there's no need for the market to push above it, since it's a bearish fair value gap and it has already done its job, right? It should push prices lower, and if we see displacement above it, then indeed we are not kind of bearish. But if we break through this low where price currently is, this fair value gap, this second candle fair value gap low, if we break through that, then I can anticipate the market to hit my TP, and I should be moving my stops towards those high. So that happened, and now most likely I can be closing my trade maybe at that point in time. But also, since we have this fair value gap, I can just give it room and see how price reacts to the fair value gap, and it's during the New York time. But if it reaches at around 12, if the candle, we don't see the candle, next candle displacing, I won't really wait for price to rally towards my entry point. Again, price pull back, not a good sign. So I should have closed. I know I would have managed my trade around this moment in time. Yeah, price pull back. Maybe we can also anticipate for maybe the next week to show a reversal going lower. But for now, that isn't really clear. So that's how you can approach it. So in this case scenario, if you have a critical high and you see price now starting to displace above it, it's not looking good. So you should try to manage your position and get out. And if you have a critical low, that can give you confidence to move your stop loss. So let's see what happened later. Price started tanking higher, then later on consolidating around that moment in time. So what's the time? So this is next week, Monday. All right. So at this moment in time, we had consolidations happening here. So if you have these lows whereby we have rejections, you can say if price breaks through these rejections that we're seeing here, then indeed I want to see lower prices. And you can see later on, did we have the final targets met? Choppy price actions. But I think finally this second target, third target, I mean, because this was the first target, second target, third target. So if we could have actually gone to the daily time frame, we could have gotten some trades. But since this was the fair value area low, let's see from the daily time frame. All right, so having the direction, identifying how you could the context area, which is really critical, a level you want to see reactions off of, and also having your critical highs and lows for you to be managing your trade positions is really ideal. So in this scenario, why could we see price drop or push higher is maybe immediate rebalances. This candle pushed higher, this candle pushed higher, but for the next candle or for a reversal to happen, we saw the prayer day high sweep as a major liquidity sweep, and that's when we started tanking lower. And as of Tuesday, could have applied the same what we've learned, then a continuation. Immediately we close below that, we should even try to look for market towards this low. Let's see whether the market pushed finally, and the market hit the final target, the third target. Let's see later on. So the market did that, consolidating. As long as if you have the direction, these pullbacks, usually what price does, a sweep of the prior day's high, and then we continue lower. So for me in this case scenario, my context area will be we had swept these lows, consolidated, pulled back. So if we see to close these, but if we continue, if I see price closing below this level, then indeed I can look for sell opportunities going lower. And maybe from the 4-hour, that didn't happen, we pull back. So until price breaks through that, that's when. But reversals, because of this liquidity sweep, price might just reverse going higher. And since we are now seeing bullish fair value gaps being formed, order blocks being formed, other order blocks being formed, and if now we see a closure above, it has already happened. So now I'm expecting a reversal going higher. You can see that going higher. And yeah, now I think it's price should be pushing high. So for us to would have avoided a sell towards that low, you can see we had developed a critical low that if price breaks, that's when I'll engage going lower. But if that was actually not broken, then we can anticipate the reversal. And now you can see price broke through this level, the level that we were talking about, and we can see price is now shifting going higher. And that's how I usually form my can I call them? Damn. My critical highs and lows, and that's how I do approach that. Later on, you can see the fair value area, though price pulled back, so the liquidities, and we continued. I guess we could have benefited in these moves because if a low is not respected and we have a refined critical high that has been respected, now you can shift your bias. So that is it. That's how I usually approach the market, and hopefully you've gotten a few things of this level. And if you need more clarity, you're going to be doing this so that it can stick. But for now, let's call it a day. Bye bye for now.